So we've had it. Our time has come. The Federal Reserve just met up to discuss what it is that their plan is for the next few months, and in fact, actually, the next 2 years. 2 years, guys. I've just come out of the swimming pool. I'm a little bit messy. I don't really care. There's some crazy information we need to discuss, and I'm going to tell you what the Federal Reserve's plan is for the next 2 years, and then we're going to get a good understanding as to how that's going to be affecting Bitcoin. We're also touching on the nice little stock to flow model that we saw from Plan B. So without further ado, let's get into it. Also, like the video, subscribe to the channel, sort me out, do me a favor. Yes, please. Thank you very much. Let's get into it. Oh, also, subscribe. Hit the old follow on Twitter. Right, guys, let's get into it. Drop me down here. You don't want to see my face too much. And that's okay. Even though I don't want to see my face too much. What we're looking at right now, guys, we have the federal rate decision. Yesterday, we had a 75 basis point hike, and now we are currently looking at another 75 basis point hike. I mean, like I said, we were like, I think it was like 83% or so of the market was pricing in a 75 basis point hike. I said, look, it's not going to be positive. If you watched my video yesterday, basically what I said was the market will be like, right, well, it's already priced in 75%. So we're not going to pump, of course. So we might have 100, which means we're also not going to pump. And also, the key thing that's important is the FOMC projections, right? These things, yeah. And look, this is me talking about them yesterday, giving you all of my wisdom. Right? This is my wisdom. But the key thing here, guys, look at this. So we had and you might not be able to see this. This is the Fed fund rate policy. So they predicted by the end of the preceding year, which was 2022, because we're looking at 2023, was 3.4. Now, by the end of this year, it's 4.4. And this is what I told you guys. I said, look, the Fed have messed up big time. PCE, no, let's go core inflation. Core inflation, 4.4. They actually expect this to drop. They've upped this from 4.3. So they expect the current core inflation. I don't even have this for you. Daily FX, give me this. Go on, boy. Daily FX, I'll find this. We'll go back. We'll have a nice little time. Where is the core inflation for the US? No, Johnny. I think it was on a Tuesday. I want to say Tuesday. No, that's Canada. All right, let's go week before. Let's have a look. Or it was on the Wednesday. Core inflation 6.3. So they expect within the next few months core inflation to drop from 6.3 to 4.4. I mean, poor. A little bit ambitious, boys. I don't really know how that's going to go. Actually, no, drop to 4.5, I should say, 4.5. But they still expect CPI to be at 5.4. Currently, what is CPI in the US? It's 8.3. If we do begin to see this move to the downside, I think we will begin to see a pump in the old friend called Bitcoinies. But obviously, yesterday, I'm looking at the 4-hour chart here. We did see a dump. I think there was a bit of buying because we're at these key levels of support. Obviously, look, I mean, we're at 18,000, 18,500, 18,500. Oh, Jesus. It's not good. It's not good, boys. It's not good. But anyway, this is what we're looking at. So yeah, I just want to cover off, what we're looking at is they expect the housing market to have a 20% crash. This is pretty insane, actually. 20% crash for the housing market. And guys, I've always said, actually, let me do this one for you. Hey. I've always said the housing market is a lagging indicator. If you want to just jump out of your stocks or your crypto, you go onto your broker, you sell them, jobs are good, and it's done in like this. If you want to sell your house, someone's got to go, is it a nice house? Do I want it? Right. Well, let's do a little survey to see if everything's okay. Right. And then we get the lawyers, then we negotiate about the price. All this. So it's lagging indicator, lags. 75 basis point was unanimous across the whole board. There was an expectation that two people would want a 50 basis point hike, but they were just like, actually, let's not go against the grain here. We might be a bit insane. And then also, so we expect 4 point. Let's look into the future. Let's look into the future. Here we go, boys and girls, and everything in between. Fed fund rate 4.6 in 2023, the preceding year. 4.6. So we expect by the end of 22, the Fed fund rate to be at 4.4. We expect it to be at 4.6 by the end of 2023. And then we expect it to begin dropping. So we will potentially see a nice little pumpy to the upside later on in the next couple of years. But basically, what we're talking about is the Fed are going to take their foot off the gas at the beginning of next year. And this obviously, this little prediction here of 4.6 has already kind of been baked in. I didn't mean to show you this just yet because it's extremely depressing. In Europe, everyone's obviously buying European indices because the US ones have just, everyone's like, see ya. Salam alaikum, goodbye. Two things I want to show you here. So, firstly, we have the Fed dot plot. This is basically FOMC dot projections. And so, this information, couple guys predicting this, this is just basically how many people are predicting what. And this all feeds into why do I not have this? Oh, here it is. Of course, I have this. So, this feeds into this. What we're seeing here. So obviously everyone's expecting now 4.25 to 4.5. But then the most important thing is we have, a small little, we keep upping it a little bit and then we don't up it at all. That's the key. So this is where we're going to have a nice little pumpy in the old Bitcoin pricey in the beginning of next year. Just want to go through this. There are some people who are obviously kind of talking about the price and the cycle because we have to consider the halving cycles. People get very, very excited about this. And so, look, if we look at this, we say Bitcoin is 835 days since the last halving. And this is around the time that the cycle bottom, give or take, a couple months before or after. So far, there's a case for Bitcoin bottom is in, unless the stock market continues to break down. Guys, the stock market is breaking down. I think we're going to have a bit of a flash crash, maybe towards the end of this month. And I think this is going to be one of the catalysts. Fed officials see recession risk rising. So, are you in a recession? Should you be buying stocks in a recession? Well, actually, yes, you should. Yeah, you should. Intelligent investors will always say yes. Not that I'm an intelligent. Actually, yeah, no, F it. I'm an intelligent investor. No, I would say obviously you should be, but people are obviously scared, and so they sell just before we get into a recession. Hopefully, then buy it during a recession. But prior to a recession, if everything's going to drop, you sell, you get out. This is why Bitcoin is below that 19K level. And I think this is it's just quite, for me anyway, it's quite like mental. Not not like whoa mental, but like it's quite a psychological level. And obviously you can see we dipped around this price here, which is why I think we're seeing a bit of a wick to the upside or a movement to the upside anyway. I could probably even just do this on the daily. I don't know why I'm looking at just get one candle for all the data. So yeah, so we are seeing this kind of area of support almost, and you can see obviously wicking down, but we're in a downward trend, boys. It's not good. We are in a downward trend, so I wouldn't expect too much. I personally would expect this to continue to the downside. So this here, but ultimately, yeah, I don't really see too many good scenarios is the bottom line. Stock to flow model, I do expect this to rebound, not yet, but obviously stock to flow is showing us that the price should, should be 100K per Bitcoin. But at the end of the day, there's a war in the world. There's global recessions. You know, the traditional markets are pretty bashed up. Um, the confidence is actually very low. Alternative, let's have a look. Fear and greed index. Tell me what you got. Right, extreme fear. Shut up. Don't tell me. Don't come at me. But yeah, anyway, inflation's crazy. Basically, guys, unless you have any questions, I'm just going to leave it here. It's actually quite a sad day. When is next CPI? Anybody know? The next CPI, I actually don't know. Why do I not know that? Maybe I just live one day at a time, live my life on the edge. I'm expecting in a couple of weeks. So we get the GDP on the 29th, which is 27 is 9. So in 1 week from today, we get the GDP, and I believe we'll get it then after this, maybe a couple days after. Esteban, good to have you back. Don't poke, just short the F if Bitcoin breaks 17,900. Exactly. Look, guys, we're in a very bad time for crypto. It's not looking good. Honestly, it's not looking good. Next move to 16. Yes. Also, guys, maybe I can show you short inter. No, not short interest. Maybe we want to look at buy orders, Bitcoin. I want to say institution. I don't think. I mean, I don't know why I'm trying to find this here on the. No, okay, I've messed this one up. I'm not going to be able to find it right now, basically. But if you have a look at the data of people buying, it basically is a Christmas tree, right? Because it goes from like 17, and then there's more at 16, and then guess what? There's more at 15, and then guess what? There's more at 14. But guess what? There's more at 13, 12, 11, and 10. But then after 10, at 9K, there is zero. It's zero. It's a Christmas tree. It cuts in. There is no interest at zero, at 9K, I should say. You know, when everyone says, you know, oh, we're going to drop down to 15, or I wouldn't be surprised if everybody, you know, the big boys, all have a specific price they want to be buying Bitcoin, and it's 10K, right? Because that's where the most interest is. You know, the most, and you can look at, I think it's derivative data. You can look at this, and if 10K is the place where people want to be buying most, then I wouldn't be surprised if there was a bit of manipulation to bring us down really towards that. You know, obviously we have different indicators that are telling us that it's going to be 14K, that it's going to be, you know, I mean, what was it? I will go on the weekly for this. This I will do. So once we break below this, where are we going? Oh, I have to go back to 2017, don't I? And let me just go on monthly. It's just going to be much easier. Right. Here, breakdown. Right. So and this again, you know, might just be a little bit of like kind of, should we say, resistance. But 14 is it's basically here. That's going to be the first area of resistance if we break past the 17K level. Going to drop, I would say, quick, faster than a paedophile at a playground. It's going to be down to 14, but then most people are saying, look, you know, I reckon probably 12 just because of this area of resistance. Again, a little bit here. And I know I'm only looking at wicks, but if we go on the daily, you'll probably be able to see it. But yeah, so you can see this here and this here and this here and also this here. So people are then saying, well, maybe it's going to go down to like 12K, maybe 11K, something like this. But yeah, I know that obviously people are going to be buying. Volume will be increasing the further down we go, but it's looking very likely we will have a drop to these lower levels, unfortunately. So that is some bad news that I have to mention. Any questions? Yeah, take a look at the SP now. S futures. It's about to drag Bitcoin to a little pump for a while. Oh, okay. S&P futures. Ooh la la. SPY. This is an ETF of the S&P 500. No, actually, no. I want futures, don't I? What I will do, actually, why don't I just do this? I was doing this earlier. Idiot. So the futures market over the day is minus 1.75 for the S&P, minus 1.8. And so this is the very, the up to date data that we see from investing.com. So yeah, we're down. Okay, nice, sweet. Yeah, very nice. But you see, look, everyone's moving away from these risky assets. Tesla, no thanks. Sorry. I'm not sure what their price to earnings is actually at the moment. Probably considerably less than when it was like 1,000, which was insane. But the bottom line here, guys, is people are selling, People are getting away from the US. And it's because of this. It's because of this. Unemployment. I didn't even finish this. Unemployment. Here we go. 4.4. Are you mental? 4.4 also in 2003, 2021. And remember, guys, it was 3.7 2022, 3.9 2023, and 4.1 2024. But basically, at the moment, guys, what we're looking at in terms of a labor market is for every one person looking for a job, there is two job openings in the US, right? Which seems pretty good, Why not get a new job? But obviously, that means a growing economy. Means there's loads of people hiring. Means people have excess cash to hire loads of people. So there are more people hiring than there are people looking for jobs. Now that's not good. Jerome Powell's job is to make sure that the economy gets squeezed, companies can't hire, they have no money, inflation goes down. So what we need a 1-to-1 ratio of people looking for jobs and job openings. Currently, it's 2-to-1. So we need unemployment, to move from what we mentioned earlier, at being 3.7. Yeah, 3.7 for this year, 3.9 for next, and 4.1 to a massive 4.4. We say, screw everyone. Not allowed to have a job. We don't like you. Don't get a job. Be unemployed, please. Help the market. Bad. But anyway, we're looking at core inflation coming down to 2.3 at the end of 2024, and that's going to be partly because of this little, unemployment rate. So core inflation is key, but yeah, 2022 core inflation needs to come down to 4.5 from. I've ruined this, haven't I? What an absolute moron! Look at me, imbecile. Right, sweet. Let me find the date. No, I just went back one day. Tuesday, I think it was. Was it Tuesday? Right, here we go. So we need to go from 8.3, right? Right, to 5.4. That's 3% in how many months? In 3 months, guys. I don't know if you think this is good. If this does happen, though, if it does happen, right, I think we're actually going to be in for a bit of a pumpy because, like I said earlier, we have this 8.3 level. If 8.3, if this starts reducing at the rate at which it should, we should see inflation drop from 8.3 to 7.3 to 6.3, then finally to 5.4 by the end of the year. This is what we want. And a big drop like this, as we always know, whenever there's a big drop in inflation, we get a nice little pumpy market. So this is what we want, guys. Anyway, I'm rambling here. I'm gonna leave you. Right. See you later. Have a great day. And I think I need to get back in the pool. Jerome Powell has just angered me. Maybe I'll jump in the sauna again. See you later. Lots of love. Thanks for watching. Take